You're scrolling through your investment app, looking at stocks that cost hundreds or even thousands of dollars per share, and you're thinking there's no way you can get into the market with your budget. But what if I told you there's an energy company trading under $5 right now that has analysts predicting it could jump over 60% in value? Today we're diving deep into Kosmos Energy, ticker symbol KOS on the New York Stock Exchange, and I'm going to show you exactly why this under-the-radar stock has serious growth potential and what risks you absolutely need to know about before making any decisions. Let me start by telling you what Kosmos Energy actually does, because understanding a company's business model is the foundation of any good investment decision. Kosmos Energy is an oil and gas exploration and production company, but they're not your typical energy player. They focus specifically on offshore oil and gas production in some of the most promising regions in the world, particularly in Africa and the Gulf of Mexico. Their flagship operations are in Ghana, where they've been producing oil for years, and they also have significant operations in Equatorial Guinea and the United States. What makes them interesting is that they're not just drilling randomly hoping to strike oil. They use advanced seismic technology and data analytics to identify high-potential reserves, which means they're taking a more calculated, scientific approach to finding oil and gas. Now let's talk numbers, because this is where things get really interesting. As of the most recent trading data, Kosmos Energy is trading around $4.46 per share. That might not sound like much, but here's the kicker. 15 different Wall Street analysts are covering this stock, and 11 of them have given it either a buy or strong buy rating. Even more compelling is their consensus price target of $7.28, which represents a potential upside of about 63% from current levels. That means if these analysts are right, you could potentially see your investment grow by more than half in the coming months. But before you get too excited, remember that analyst predictions are just educated guesses, not guarantees. The company's recent performance has been genuinely impressive, and this is one of the reasons analysts are bullish. In the second quarter of 2024, Kosmos Energy beat earnings expectations for the fourth consecutive quarter. That's not just luck, that's consistent execution. Their production increased by 7% year-over-year, which in the oil and gas business is a significant achievement, especially when many companies are struggling with declining production from aging fields. They're producing roughly 65,000 barrels of oil equivalent per day, and they've been steadily increasing this number through efficient operations and strategic development of their existing fields. Let me explain why the timing might be particularly good for an oil and gas stock like Kosmos Energy. The global energy market is in an interesting position right now. Despite all the talk about renewable energy and the transition away from fossil fuels, the reality is that oil and gas demand remains robust, particularly in developing economies. At the same time, many major oil companies have been underinvesting in new production capacity for years due to pressure from environmental groups and uncertain oil prices. This has created a supply-demand imbalance that's pushing prices higher. When oil prices go up, companies like Kosmos Energy see their profit margins expand dramatically because their production costs stay relatively fixed while the revenue per barrel increases. With global energy security concerns, particularly after recent geopolitical tensions, many countries are prioritizing reliable energy supplies, which benefits traditional energy producers. The company's financial position has also improved significantly. They've been working hard to reduce their debt load, which is crucial for a smaller energy company. High debt levels can be devastating in the oil and gas industry because when prices drop, you still have to make those debt payments even if your revenue has plummeted. Kosmos has been using their cash flow to pay down debt strategically, which gives them more financial flexibility and reduces their risk profile. They've also been disciplined about capital spending, focusing their investments on projects with the highest returns rather than trying to drill everywhere at once. This financial discipline is exactly what you want to see in a company trading at this price level. Their operations in Ghana deserve special attention because this is really the heart of their business. The Jubilee Field and the 10 fields offshore Ghana have been consistent producers, and the company has been working on enhancing recovery rates from these fields through various technical improvements. They're not just pumping out oil as fast as possible and hoping for the best. They're implementing water injection programs and other enhanced oil recovery techniques that can extend the productive life of these fields for decades. Additionally, they've been exploring other prospects in the region that could add significant production if successful. The political and regulatory environment in Ghana has been relatively stable, which is not something you can take for granted when investing in companies that operate in frontier markets. But I need to be completely honest with you about the risks, because penny stocks under $5 are not for everyone, and there are real dangers here that could result in you losing money. First and foremost, Kosmos Energy operates in a highly volatile industry. Oil prices can swing wildly based on factors completely outside the company's control: global economic conditions, OPEC production decisions, geopolitical events, weather patterns, and countless other variables. If oil prices crash like they did in 2020 when they briefly went negative during the pandemic, this stock could get hammered regardless of how well the company executes its business plan. Second, they operate in frontier markets, particularly in Africa, where political instability, regulatory changes, and infrastructure challenges can disrupt operations or change the economic viability of projects overnight. Third, smaller oil and gas companies like Kosmos don't have the financial cushion that giants like ExxonMobil or Chevron enjoy, which means they're more vulnerable during downturns. There's also the longer-term existential question facing all fossil fuel companies: what happens as the world transitions to renewable energy? While oil and gas will be needed for decades to come, the trend is clear that consumption will eventually peak and decline. Companies that don't adapt or that don't generate sufficient returns before that transition occurs could see their valuations crater. Environmental regulations are also getting stricter globally, which could increase operating costs or limit future development opportunities. And let's not forget the simple fact that penny stocks are called penny stocks for a reason. They're more speculative, more volatile, and statistically more likely to underperform or even go to zero compared to larger, more established companies. Another consideration is the company's competitive position. While they've carved out a nice niche in West African offshore production, they're competing against much larger companies with deeper pockets and more advanced technology. If a major discovery is made in their region by a competitor, or if a big player decides to move aggressively into their markets, Kosmos could find itself at a disadvantage. They also don't have the diversification that larger energy companies enjoy. They're heavily concentrated in a few key assets, which means a single operational problem or disappointing drilling result could significantly impact their overall performance. So what's the bottom line here? Kosmos Energy at under $5 per share represents a high-risk, high-reward opportunity in the energy sector. The bull case is compelling: strong recent performance, analyst optimism, improving financials, solid production growth, and a favorable commodity price environment. If oil prices remain elevated or move higher, and if the company continues executing well operationally, there's a realistic path to significant gains from current levels. The consensus price target of over $7 suggests a potential return of more than 60%, and if oil prices surge due to supply disruptions or increased demand, the upside could be even greater. For investors who believe in the continued importance of fossil fuels in the global energy mix and who are comfortable with the risks of smaller energy companies in frontier markets, this could be an attractive speculative position. However, and this is crucial, this should never be a core holding in your portfolio unless you have a very high risk tolerance and understand the energy sector deeply. If you're going to invest in Kosmos Energy or any penny stock, it should be money you can genuinely afford to lose without impacting your financial security. A reasonable approach might be to allocate a small percentage of your portfolio, maybe 2 to 5% at most, to speculative plays like this while keeping the bulk of your money in diversified, lower-risk investments. You should also set clear rules for yourself before buying. At what price will you take profits if the stock rises? And at what price will you cut your losses if things go wrong? Having this discipline is what separates successful investors from gamblers. I also want to emphasize that I'm not a financial advisor, and nothing I'm saying here should be taken as personalized investment advice. Before making any investment decision, you need to do your own research, consider your own financial situation, risk tolerance, and investment goals, and ideally consult with a qualified financial professional. Every person's situation is different, and what might be appropriate for one investor could be completely wrong for another. The stock market involves real risks, and you can lose money, especially with volatile stocks like those trading under $5 per share. If you do decide to explore Kosmos Energy further, make sure you read their quarterly earnings reports, listen to their earnings calls, understand their production guidance, monitor oil price trends, and keep an eye on any news related to their key operating regions. The energy sector moves fast, and conditions can change quickly. Stay informed, stay disciplined, and never invest based on emotions or hype. If this video helped you understand Kosmos Energy and the opportunities and risks it presents, please hit that like button and subscribe for more deep dives into investment opportunities. Drop a comment below letting me know what stocks you want me to analyze next. And remember, successful investing is a marathon, not a sprint. Do your homework, manage your risk, and make informed decisions. I want to make it very clear that I am not a financial advisor, and nothing in this video should be considered financial advice. This content is purely for educational and informational purposes only. Before making any investment decisions, you should do your own thorough research, consider your personal financial situation and risk tolerance, and consult with a qualified financial professional. Investing in stocks, especially penny stocks under $5, carries significant risks, and you could lose money. Never invest money that you cannot afford to lose. All investment decisions are your own responsibility. Thanks for watching, and I'll see you in the next video.